Hello and welcome back to Global Value. In today's video, we are going to be performing a fundamental stock analysis of Delta Airlines Inc., ticker symbol DAL. Looking at Delta here today is going to round out our recap of the leading U.S. airlines. The reason we're looking at Delta here today is that the company has just recently rebounded a bit from their 52-week lows, and given the tumultuous times of the COVID-19 global pandemic and the associated lockdowns, all of COVID's impact on the travel and airline industry, we want to see how things have been rebounding fundamentally here for Delta Airlines, and we're going to be doing just that by diving in and looking under the hood to see what their financial metrics are looking like post-pandemic. Currently, Delta Airlines is trading for $30.52 per share. Year to date, they are down 22%. Over the past year, they're down 32%. Over 3 years, their stock price has almost been cut in half. Delta Airlines is only up $10 from their pandemic lows, so their stock price had recovered. It went to about double where it was in the pandemic, but for the past year and a half, it's been sliding lower. Pre-pandemic, they hit highs of $60 per share, so they're still down half of their all-time highs there. Over 10 years, things are looking better for Delta. They've compounded at a rate of 11.5% annually, which is actually pretty decent over this time. Going back to the global financial crisis, however, Delta Airlines has only compounded at a rate of 2.2% annually. Keep in mind that they did pay out dividends over this time, although they've cut their dividends in recent years. Delta is currently trading about $3 over their 52-week low, and their stock price is down $16 from their 52-week high. About 2.5% of their shares outstanding are currently sold short, and they're one of the larger airlines. They have just under a $20 billion market cap. For more background about Delta's business, Atlanta-based Delta Airlines is one of the world's largest airlines, with a network of over 300 destinations in more than 50 countries. Delta operates a hub-and-spoke system network where it gathers and distributes passengers across the globe through key locations such as Atlanta, New York, Salt Lake City, Detroit, Seattle, and Minneapolis-St. Paul. Delta's sale of frequent flyer miles, particularly to American Express, is a major driver of the firm's profits. The company operates a fleet of approximately 1,200 aircraft. Delta Airlines Inc. was founded in 1924 and is headquartered in Atlanta, Georgia. So for our fundamental analysis today, we are going to be performing the Select 6 analysis, taking a checklist-style approach of 6 standard financial metrics to come to a holistic and beginning understanding of Delta Airlines based off of their business fundamentals. So this analysis is a work in progress, and it's an opportunity to learn in public. It will continue to evolve and get better over time. So with that said, let's get right into our analysis today. Starting off here with metric number 1, we want their average return on capital over the last 5 years to be above 14%. There are 2 reasons for this. The first is that over the long run, over the course of decades, a stock is going to return approximately what its underlying business returns, and these business returns are captured here by return on capital. The second is that the average publicly listed business only earns about a 7% return on capital. So by asking for 14% here, we can build in some potential margin of safety for ourselves based off the overall quality of the business being about twice as good as average. In 2017, 2018, and 2019, Delta was earning quite a bit above average returns on capital. They were doing really well for themselves. However, as is the story airline industry-wide, they really took a punch to the gut during 2020. Their returns on capital were negative for fiscal 2020 and 2021. Over the last 12 months, their returns on capital are actually positive at coming in around 5%. Averaged out over this time frame, they're earning about 7.5% returns on capital. While that number is respectable, it's just about average here. So they're actually coming in ahead of their peers here, and their rebound has put them pretty much in line with Southwest Airlines when it comes to their returns on capital, but that's still half of that 14% mark we were looking for, and so this is going to be an X on metric number 1. So far, we have not found an airline post-pandemic that's earning these returns on capital that we're looking for. Even though the COVID-19 pandemic was a black swan event, airlines historically have been known as a very difficult business. They have a host of different operational issues, and they are a commoditized business. While potentially not as extreme as some other commodity businesses, they are cyclical in nature, and historically it's been difficult to be a highly profitable airline operator over the long run. Anyways, this is an X to start off here on metric number 1. Metric number 2, here we're looking at a high-level overview of the cash coming into the business. we want their revenues, earnings, and free cash flows to have grown over the last 5 years. This metric is all or nothing in nature. Either all three of these are going to be up for it to be a check, or if even one of them is down, this entire metric will be an X. Delta's revenues shrank by about 25% from fiscal 2017 to fiscal 2021. However, including their year-to-date numbers, their revenues are actually up just a tiny bit. However, their earnings are quite a bit down. They had about $3 billion of earnings in 2017, and they posted just under $300 million of earnings last year. Similar story for their free cash flows. They're also down. They had $1.1 billion of free cash flow in 2017. Fiscal 2021, they only produced $17 billion of free cash flow. And over the last 12 months, this is getting better, but it's still quite a bit down. They produced about $240 million of free cash flow. Still only about a fifth of what they produced in 2017. So this means that metric number 2 here is going to be our second X in a row. Metric number 3 is going to build off of the previous metric. Here we're taking the perspective of an individual shareholder in the business by looking at Delta Airlines on a per share basis. We want to see earnings per share growth over the last 5 years. As we learned in metric number 2, their earnings are down over this time. However, their earnings per share are not down at the same rate that their earnings are. Their earnings per share are actually down slightly less. And this is because Delta, in stark contrast to its peers, has been buying back their shares over this time. So Delta has actually bought back 11% of their shares outstanding in the last 5 years. We saw pretty much the rest of their peers issue shares over this time, with some of them having to issue quite a bit of shares in order to avoid insolvency issues. That's an encouraging sign to see here for potential long-term shareholders of the business, that they did buy back shares and they had bought back enough that even though they had to issue new shares starting in 2020, they still had net buybacks over this time. This is important because when you purchase a share of stock, what you're really buying is a fractional ownership percentage in that underlying business. So when a company buys back shares, they're increasing your ownership percentage of the business, which ultimately means that they're increasing the percentage of the business's profits that you're going to be entitled to. So even though their earnings are down over this time, your percentage of the earnings as a long-term shareholder in Delta here would have grown by 11% here. Not great to see that their earnings are down. Potentially is a nice sign that they're buying back shares, but their earnings per share are still down over 5 years. And so this is going to be our third X in a row here on metric number 3. Metric number 4 is going to be very similar. Here we want to see free cash flow per share growth over 5 years. They're only producing about 25% of the free cash flows per share that they were in 2017 currently. Although it's encouraging that last year they posted positive free cash flows per share and positive earnings per share, and these numbers have continued to improve, although they're not back to where they were in 2017. This is going to be an X on metric number 4, but we are seeing their fundamentals keep on improving as the overall airline industry is rebounding from its lows in early 2020. Next up, for metric number 5, we want their net debt, which is long and short-term liabilities minus cash and short-term investments, to be below the amount of free cash flow that they produced over the past 5 years. So at the end of last year, Delta had $24.5 billion of net debt. Currently, they have about $23 billion of net debt. Over this time, when we add in the cash that they consumed during 2020, the company has produced about $800 million of free cash flow. So they're still in the net that they're spitting off free cash flows here, and it's better than the business consuming free cash flows. But their free cash flow numbers are quite a bit below where their debt position is right now, and they had to incur a significant amount of debt during the pandemic. So in order to understand this better, you would really likely want to go in and understand their debt profile. They likely break this out in some amount of detail in their 10Q filings. And so the structure of this debt, what kind of rates they're getting, and when this debt matures would be very important to understanding Delta here. So this is going to be yet another X on metric number 5. And based off of their abilities to produce free cash flows currently, the business has a lot of leverage, which means that in the event of an economic downturn, or if we were to see another massive hit to their business through some form of other unknown event, that could potentially spell quite a bit of trouble for Delta. However, from their lows during the pandemic, the business has been recovering, and hopefully this means that they'll continue to prioritize repaying their debt now and into the future. Finally, the big metric of them all, metric number 6, we want their average 5-year free cash flows to total enterprise value yield to be above 5%. If this is the case, this would potentially give us a risk premium to the risk-free rate of the 10-year treasury, which ultimately means that it would give us a potential reason to be interested in the business. So as we learned over the past 5 years, Delta Airlines has only produced $600 million of free cash flow. Currently, they have a total enterprise value of $42 billion. So total enterprise value takes into account both their market cap and their net debt position. It's a more realistic economic picture of the business than their market cap is alone, and it's more akin to if Delta was a private business. So based off of their $800 million of free cash flow in the last 5 years, that means they're producing $160 million of free cash flow in a given year. Over the last 12 months, they produced about $240 million of free cash flow, so not far off from that at all. So when we divide their $160 million of free cash flow by their $42 billion total enterprise value, that is only going to give us an average free cash flow to enterprise value yield of 0.4%. So that is less than 1%, and that's well below where the risk-free rate is at currently, meaning that metric number 6 is going to be an X here, and based off of their cash flows to their enterprise value, we are not seeing any potential risk premium that would make us necessarily interested in Delta, as the business seemingly lacks a margin of safety compared to other opportunities. So keep in mind that this type of analysis is not financial advice. It is not a buy or sell recommendation of any security. And before considering any potential investment decision, please consult with the properly licensed and registered financial and legal professionals. Lastly, here we're looking at Delta's dividend profile. So Delta used to pay out dividends. In fact, they used to pay out a pretty sizable portion of their cash flows as dividends. However, this is no longer the case. They cut their dividend right alongside pretty much everyone else in the airline industry in early 2020. And if you're interested in the business for its potential abilities to pay dividends again in the future, you'd likely need to see a sustained track record that the business has continued rebounding from where they were at in 2020. So right now, it looks like they're on that rebound path, but we don't have a lot of data points yet. So in summary, Delta Airlines is 0 for 6 on our Select 6 analysis. They check no boxes. While the business does earn just slightly above average returns on capital, and they've gotten their return on capital number back into the black, their returns on capital are still well below where they have been historically. Their earnings and free cash flows are down over the past 5 years. One bright spot is the company has been a net buyer of their own shares over this time. They've bought back about 11% of their shares outstanding. Then probably one of the most important aspects to consider about Delta is that they have a very high debt load right now. They have $23 billion of debt compared to about $240 million of last 12 months of free cash flows. To understand the business better, you're going to have to dig in and learn about how their debt is structured. Then, based off of their average free cash flow yields to their enterprise value, it looks like the business is not offering us a margin of safety currently. And we learned that the business, right alongside its peers, cut its dividend payments in early 2020, and it looks like the cash flows that are coming in have been prioritized toward repaying their debt. Again, this type of analysis is not financial advice. Instead, it serves as a holistic and beginning understanding of Delta Airlines to help you determine whether you think it's worth your while to dig in and learn more about the business in more depth. So some fantastic resources to do that would be reading through the company's annual 10Ks. Those are its annual reports, which will give you background about the company, operational history. You'll get a profile of the business's potential risks, and you'll get a sense of both the character and competence of the business's management. When you're done with that, I would also recommend reading through some of their recent earnings call transcripts to get a better understanding of how the business is operating in a chaotic global environment right now. Again, historically, airlines have been difficult businesses. They have operational challenges, unionized workforces, and they are a commodity business. Ultimately, in your research of any company, you want to understand the business as if you owned 100% of it, and you can truly understand all of its ins and outs and know what's important and what's not important for the company. If you're interested in Delta Airlines, then reading through their 10Ks, 10Qs, and recent earnings call transcripts will provide you with a deeper understanding of the business overall. So with that said, that's it for today's fundamental stock analysis of Delta Airlines Inc., ticker symbol DAL. If you enjoyed today's video, please be sure to like the video, subscribe to the channel for more stock analysis videos, and comment down below what business you want me to take a look at next time. Thanks for learning about Delta Airlines with me, and have a great day.